Short seller Carson Block of Muddy Waters says he is starting to see cracks in Canada's real estate market. He told Bloomberg's Danielle Bokove earlier today there could be some real problems brewing due to investor complacency rising along with soaring household debt levels. Let's bring in Carson Block from San Francisco. Carson, thanks for joining us today. In your conversation with Danielle, you cited three things. You talked about investor nerves, rising debt levels, and concerns about the real estate market. And you've said in the past that you're not looking actively for opportunities in Canada's housing market, short opportunities that is. Has that changed at all?
Actually, that's a funny question because this morning before the market opened, I tweeted that we would be shorting something in Canada, and I haven't seen that kind of social media traction in a long time. And there was also, as I think you've covered, a stock that we had no intention of shorting that, for whatever reason, reacted very negatively to that. And it makes me think that maybe Canada is the hottest market in the world right now for short sellers. Or if it's not, it really could be.
Yeah, and you're talking about Element Fleet Management, which of course is not the stock that you were shorting. You were shorting Asanko Gold, which I want to come to with you in a moment. But I want to ask you more broadly about the Canadian housing market, because one of the things that you said really struck me, that this idea, this prevailing sense in Canada that we won't see something akin to what we saw in the housing crisis in 2008 down in the U.S., that can't happen here. Does that almost bolster your case that it actually could?
Yeah, I think anytime you hear on a widespread basis people saying it's different this time, it's different here, that means that it will be no different, and eventually there's going to be a bad ending to it. I mean, there are laws of economics, and those laws eventually apply. And one thing that was pretty interesting for me with Canada, and to be clear, I've not looked at Canada closely, but the last time I was up there was actually 2011. Had some meetings after Sinoforce. And I actually saw, I was in a building that was owned by one of the large banks, and this is a couple of years after the financial crisis. There were these ads everywhere saying borrow to get ahead, and were really encouraging debt-fueled consumption, and it just struck me as bizarre given what the U.S. had just gone through. So, several years later, you've had that. You've had real estate being pushed up in part by foreign buyers, which I think creates this frenzy. And a lot of Canadians have taken on debt to participate. So, yeah, the conditions, again, from a pretty distant perspective, but the conditions seem to exist for there to be some real pain inflicted on the market, probably in the not too distant future.
So, what concerns do you have about regulation in Canada? The institutions that are meant to keep these issues in check. I know that you've talked about the regulatory structure here in the past and how much of it resides at the provincial level. How much of a problem is that in your view?
Well, so I'm not an expert on the regulatory environment in Canada, but I can tell you that there are certainly some provincial regulators in Canada, and I'm speaking about the market regulators, that are more capable than others. And I think it's a pretty curious situation to me. I guess the analog would be in the U.S. if the states had their own securities regulators, which they do regulate companies, but the SEC is obviously the regulator of the market. So that's the problem when you have differing levels of resources and sophistication. Yeah, there's probably a lot that could fall through the cracks in Canada.
I want to turn to your latest short, which is a Senko Gold, based in Vancouver. And we have some photos, satellite photos from your latest report showing before and after. This is photos of a wall failure, what you're calling a wall failure at the Encron mine. There have been some questions posed by analysts over the validity of these photos. What do you have to say to them to assuage concerns?
Really? The photos are valid. Guys, I've been doing this 7 years. If I were the kind of person who were putting fake information into reports like that, I think muddy waters would have ended a long time ago. Please see Sino-Forest and similar accusations that were leveled at us by that management, which I think is still on trial for fraud. So the photos are valid. And if that's the only thing that's keeping a buy recommendation on the stock is your doubt about the photos, really it's time to switch the rating.
And break it down for me in terms of your take on management and how they're pitching concerns about the ore quality in this particular mine. This is their only mine, but they have several projects there. Can you talk to me about whether you see this as outright fraud? Is this a cover-up?
Well, look, fraud is, not to be too technical here, but I mean, fraud's really about a state of mind. If I were to say, okay, these guys are committing fraud, I would have to know that they are intentionally saying things that are not true. I can't know that from this point, from this vantage point. I mean, it's definitely not the most transparent company. Their other management teams would perhaps have fallen on the sword sooner and let investors see the problems. But I can't really give you an opinion as to whether they're committing fraud. I mean, that's not, to be clear, we've not called it a fraud, but at the end of the day, we think it goes the way of substantial frauds regardless of whether it's a fraud or not, and that is, we think it's headed to zero.
And management is calling this Encron mine a placeholder of sorts. They say that presumably they're going to have some other projects coming online very soon. The Dynamite Hill one potentially in a couple of weeks. Do you see that as another leg of cash flow that could buttress new projects in the context of how do they avoid bankruptcy?
Well, these satellite deposits, of which Dynamite Hill is one, the company is constantly shuffling around which satellite deposit is going to be next. And to be clear, neither Dynamite Hill nor any of the other satellites has the cash flow potential, in our view, to help this company get out of the corner that it's in. So, it's a positive headline for them, but substantively that doesn't change anything. That's our view. I mean, the really big one that they need to figure out how to develop is Asase, and they need a lot more cash flow from Encron than the 166,000 ounces that they just reiterated they can pull out of there relatively easily without a pushback. They need a lot more cash flow to develop Asase than they're going to get from those 166,000 ounces. And what's interesting from their response, there are a number of things I could say, but I guess really directly to the point here is, we speculated in our report that the company is about to walk away from Encron and that the mine is therefore about to pinch out. And their response, just focusing on the 166,000 ounces that they could obtain without a pushback, really validates that concern of ours that the mine is about to pinch out, or effectively already has.
Okay, Carson, thanks for being here. We appreciate it.